Hello everyone. Before we start with the video, I want to say a couple of things. I am not a financial planner nor a financial advisor. I'm not FCA approved. I'm not approved by any institution that allows me to give financial advices. Nothing mentioned in the video should be considered as an investment advice nor guidance. Everything showed, talked, and explained is for pure and only educational purposes. The risk is in your own hands, and I always recommend trading on them accounts as that's literally the only way to not lose money in this market. Enjoy the video. Hello guys, good afternoon, good evening, good morning, whatever you are. Today is Wednesday, July 7th. Going to be basically showing the trades that happened today, the trades that I took, the trades that I missed out on. Talking a little bit about the mistakes that I made and the things that I basically did right. And yeah, that's basically it. We'll begin with this trade that we have right here. This one. What I encountered, I got up at 6 a.m. So you can see 6 a.m. right here. This is the time that I got up. I realized that we had a flip. Then we had somewhat of a range and a break. So what I was looking in the morning was something like this. I wanted for price to hold on. I don't have my okay. I wanted price to basically come back into this range as it is a range before this. I was waiting, of course, for this break, but basically we did break that, and I was waiting for price to basically come back into this. I had already placed an entry when price had broken this structure, and as you can see, price just continued to push higher, which basically made me miss this opportunity. We then later get this sell that we have right here. I identified it as a continuation type of trade, which if you look at it from a little bit bigger of a perspective, it does make sense, but in the 1 minute it doesn't make as much as I would maybe want it to. So as you can see, we have price flips right here, comes back to mitigate the cost to that flip, we then break again, and price comes back to mitigate the cost to that break. In this case, it's actually the extreme, not the cost to the break itself, but yeah, basically that. So I decided to take that trade, and I talked about it when I was on it. Let me see if I can delete chats, because to be honest, it's getting a little bit noisy. But basically, I was talking about it, well, very early in the beginning. Yeah, this one right here. So the target goes through a potential area of reaction, just as I was trying to show here. So my target was somewhere around this area, which basically meant that price had to actually break that area, meaning that I was expecting the sells to, or the supply to basically overtake the demand that we had at that time. And whenever price actually got to this area, if I saw any kind of resistance or anything that showed me that price wasn't allowing, well, sorry, not price, but this area wasn't allowing price to actually continue to go lower, then I would most likely close the sell and maybe try to get into the buy, or what I've done in a couple of occasions, basically just take the buy while the sell is still active, which would have been a little bit riskier, as price could have done something like this, takes me out on a stop loss, doesn't actually hit the target, it's something about there, and then price just starts to push higher, basically taking me out on a loss here and a loss here. What I could have done, of course, also is move my stop loss to break even or something like that to just avoid the loss itself. But yeah, it's not quite what I like to do. I don't really like to move stop loss to break even unless we have any specific occasion or major move, such as so let's say we took this buy, right? We took this buy. The stop loss, of course, is below this area, started to push higher, and we have some major structure being created. And when we have these type of lows, which in my opinion are somewhat of basically strong lows in this case, I will move my stop loss to something like this, right? So that will be the only case that I would actually either move my stop loss to break even or trail it a little bit below a low or above a high, depending, of course, if we're buying or selling. So what I basically the mistake on this trade was that I didn't analyze correctly this area. As you can see, we have somewhat of a pause just before a major break, and whether you believe it or not, sometimes we'll have pauses like something like let me see if I yeah, this one. Well, actually, that one reacted well. Something like this, just a literal pause before a break. In this case, this pause didn't actually break anything, but as you can see, price actually did come back and hold on, did come back and kind of reacted to that area. So it's possible whether it is just one candle, whether it is I don't know how many candles are inside of this range, but basically it doesn't matter the amount of candles, but basically what it does. And if it pauses just before a break, it means that it's basically how do you say this? Now I'm not gonna get into this because it's gonna be a large video, and I'm not looking forward to that. So basically, range or pause before major break, before flip, before a break that looks important. It's a pretty good area where you could try and trade. So basically, I misinterpreted this as I thought it didn't cause any major thing, but then realized it caused a major break to the left, which basically made me miss out on this pretty good buy, as you can see, and we even had kind of reacted to somewhat of an area down here. So the buys were actually a pretty good choice at that point already, and basically made me take a stop loss, as I didn't move my stop loss to break even because it didn't make sense for me. I was later thinking about taking a trade here, but as you can see, it again, same thing as I was talking about just a second ago. It reacted to a pause just before a break, right? We have a break here, and this is a pause that was basically just before that that break. I would have gone for that whole thing though. So, in this point, I actually took a loss here, if I remember correctly. This wasn't the greatest trade, but I was kind of going for this, and it didn't trigger me, and then it broke again, so I was kind of going for this with the stop loss just above this week, and it basically didn't work out. At this point, I kind of realized that I was looking for sells where the market was actually trying to buy, so I said, okay, so I actually have to look for buys at this point. As you can see, price did continue to push higher, so I took a loss here. I think I took a loss here too, which is just a minor break, but I've seen stuff like this working. And actually, what I missed out on here is, I don't want to delete that because otherwise I'll forget it. We have higher highs, high lows, higher highs, high lows, higher highs, high lows. Basically, price continuing to push higher, right? Most of those movements basically come back to mitigate important areas where price basically costs something. Here in this case, nothing, but yeah. When we have this break, the cost to that break is basically these two candles that we have right there, right? And when I have a candle as big as these two, I basically just prefer to not take the trade or to wait for something else to happen. Because if I was going to take this on the 50%, it would have been a huge area, and if I was going to take something as this, just this small portion, could have been better, but I mean, it's just doesn't make as much sense as it doesn't make as much sense sorry, for me to actually take that trade. The thing that actually happens is that we do have a break here, we had a flip there, so basically we're pushing lower right now. We're kind of, supply is kind of taking over demand, but at the same time we have an impulse right here. We have an impulse right here that causes a flip, as this is a break, this is a flip. We cause a flip, price comes back to mitigate the extreme area and then continues to push higher. So that's a trade that I basically missed out on as I was looking for the sells. And something that I actually talked about yesterday is that you should never look at only one side of the market. Of course, I'm not saying, okay, take a sell here and a buy here, and then a sell here and a buy here. That's not quite what we're trying to do. We're not trying to take 100 trades in a day and win 30 of them. We're trying to take, let's say, 6 trades in a day and win 2 to 3 or 4, and if we're good enough, 6 of them. right? But the thing is that it's important to never stop looking at what's happening at the other side of the market. In this case, we have a pretty strong and extended move to the upside, which basically any movement that shows a potential trade towards the upside should caught your attention, as you could be looking for opportunities. Then I sent a screenshot about this trade that we have right here, where we had a flip, we had a break, and when the sell basically failed, I thought, okay, so we may have a buy, but at the same time, we may have a sell right here, right? So I sent a screenshot. This is not a trade that I actually took, but basically, yeah, that's basically it. We then get somewhat of liquidity. When liquidity is formed, you're kind of looking for price to actually get to that area and take that liquidity. In this case, that's exactly what happened. So this area, this is not a trade that I didn't take this trade, nor something that I usually take, nor probably will take in the future. As we do have somewhat of a reaction to this range, we have a sell to buy. This range that we have right here could be considered important, depending on how you look at the market and what kind of setups are you looking for. And basically, we then have a move, but that move doesn't break the high. But at the same time, it creates equal highs, and equal highs are liquidity. And liquidity means basically somewhat of a magnet for price to actually go up there. In this case, up there. In some other cases, let's say this is liquidity. In other cases, basically to go down there, take the liquidity, and then continue to push higher. So, as I said, you can basically identify it as liquidity. You can identify it as an area that price is basically failing to push through, and it'll then continue to push lower, or whatever you want to take it as. But basically, I identified it like that. And when price was somewhere around the third candle, maybe that one, that's when I realized, oh, well, we actually do have a buying opportunity right there. At this point, if I remember correctly, is when I told you all that price is actually going way too high. And yeah, here, price is getting too high, should retrace deep later through the day, which is exactly what happened. And I tried to give an explanation later to why did I know or why did I think that, but basically it ended up happening, and I don't know. I mean, there are some things that I just react to based on history or the things that I've seen through the years, through the months on the markets. And whenever you have such a, let's say the day begins bullish, the day will most likely not end up bullish unless you have, let's say the day was something like this, where you have a bullish movement, then a bearish movement, then a bullish, then a bearish, then that will be something a little bit more understandable. But when you have such a strong and extended movement towards the upside on the day, you might see some sells. Well, not some sells, but some movement towards the downside, which is what happened today. So I don't really have a concept for that or when can it happen, but I've seen it work a couple of times, and that's why I mentioned it, and basically worked out pretty well. Okay, so we then have a flip. As you can see, we had liquidity up here, which this wicks basically took that liquidity and then continued to push lower. That's a pretty good indication that shows that price was looking for liquidity to basically create this movement towards the downside. So that's actually a pretty good indications for the sells. As you can see, there are a couple of notes here. I didn't actually do the markups, as I did want to talk mostly, and the markups I'll probably do them for the screenshots that I will be uploading later. And basically what you see right here is that, as an example, we had a pretty good opportunity, which is basically based on break mitigation, break mitigation, break mitigation. That was kind of what I was looking for, where price basically just mitigates and continuates on a somewhat of a similar pattern, right? They react to the extremes and stuff like that, and that's something that sometimes happens. Okay, we get to this where we have a break. I placed this order to I think it was to the 25. I was really tired of missing out on trades, so I said, let's go for 25. Maybe I even went for the open of that. But basically what happens later is that price actually flips again, as we do have a flip there, although it's a very small flip, so I don't know. On the markup, I will place it as a break of structure, as didn't cost that much. But in the moment, if you do see some movement towards the upside, then you could consider this small wick, this small candle, as a flip. So when we get this break, my mind is a little bit. I was going to say a little bit confused, but that's not what I was going for. But your mind can be a little bit lost, right? Because at this point, when you have these concepts of liquidity, but also have some concepts of supply and demand, where you break structure like this and basically come back to mitigate some order blocks, you have either to choose the extreme area that has liquidity below it, and as you can see up here, we have liquidity. Price came up and took it. What we could have been expecting is for price to basically take that liquidity, mitigate the higher order block, and then continue to push lower, right? That's the first thing that you think when you have liquidity. Price will take that liquidity. And of course it will at some point, because price will, if we go to the weekly, oops, that's not a way to go to the weekly. Kevin, yeah. So if price pushes higher, it then pushes it lower. So that's what I'm basically trying to illustrate. But yeah, on the 1 minute time frame. And basically, what I'm trying to say is that sometime price will come back and take that liquidity. Probably won't mean much as I wanted it to mean in the moment. But yeah, I'm getting out of topic. So basically, decided to place this trade with a small risk. If I remember correctly, was just so half of what I usually risk, and I only risk a 0.25% of my account. So you can already imagine that's a very small risk. And that trade actually ended up working out. And this is the trade that actually got me back to break even after this and this loss. And of course that one. I think I was in a little bit of a loss though. Yeah, most definitely. Okay, so basically at this point, after placing this trade, I actually had to leave my house. Came back, realized price was here, so that was a take profit, pretty good. Came back up, we had a flip. I was kind of looking for a buy. As you can see, I have this Fibonacci drawn, but I never really acted on it. As you can see, it does react to this sell to buy, to the whole area itself, but it didn't look good enough for me to basically risk it. And look at that, 50% reaction, very precise. It didn't look strong to me to just take it just like that, just with one flip. So basically I decided not to. We ended up having a major break towards the downside, which could be actually considered as a flip, and I decided to go with that one. And basically this is a trade that got me back up to a 1% profit. Let's call it 0.75, as it basically we're basically on a little bit of a loss even after taking that win. If this win would have been with the full risk, that most definitely would have been a little bit more than break even. But yeah, so that'll be basically it. So if you ask me what were my mistakes and what were the strengths of today, mistakes is that I was a little bit scared of taking some trades. Not gonna lie, the only trade that I would have actually taken that it would have ended up in a take profit that I didn't take because I was scared is only one. If I would have taken every trade that I was actually scared of, I think I would have had 2 to 3 more losses. But overall, with that extra take profit, I would have actually ended up with maybe a 1.25% overall for the day. So that's why we use risk management. I mean, that's as simple as that. Because if you go for 1-to-1s, then you have to win 60% of the times. If you go for 1-to-10s, then you can win once and lose 9 times, and you'll be up by 1 hour, right? That's literally I don't want to say the only way, because I don't think that it's the only way, but it's the best way to actually make profit on this market, because you will never win the 100% of the times unless you are the algorithm, which of course we're not. Yeah, I mean that's basically it. That's basically what I wanted to talk about. My mistakes were that I didn't analyze correctly. This trade would have been a massive trade. Of course, I would have gone for just the 5R I always go for. But yeah, that small thing that I missed out on basically made me miss a take profit. And yeah, I mean, I wasn't aware. It's not that I wasn't aware, but I was just, I don't know, I was very focused on the sells for some reason today. And that's why I basically was looking for sells all over the place, as you can see. But I didn't even consider this as an area. I mean, I saw that it was a pause just before the break, but at the same time, I didn't feel like so much of a important area to actually go for. So those were the mistakes. Of course, a little bit of a poor analysis just with this and this one, and a little bit of advice about psychology as I was about to close this trade when we were half through the trade. I can't say psychology about this one because I didn't even look at it, so I didn't even place an alert to actually check how it was going. So I mean, sometimes it's better to do that, to just not place anything. Just say, okay, place the trade. I'll come back in a few hours and check how it worked out. In this type of strategies, you can't really do that as you to basically have flip and a break and you could already have an entry. So it's not something that I quite like to do, but I had to leave home, so I basically came back to this, and I'm not gonna complain, of course. And I think that the good things that we did is that we persevered. We never stopped trading. I continued to look for opportunities, even though I was having a pretty bad day. I mean, 3 losses on all this move, and I don't really remember if I took another loss later, to be honest. But yeah, I think that's basically all. I hope you all enjoyed, and I'll be coming back tomorrow with another video.